It is Monday, April 12th, 2021. It is 8 p.m. Pacific Standard Time, and so you know what time it is. It's time for a little bit of coin metal. And it was yet another non-virtual Get Your Ass Kicked at Jiu-Jitsu Monday. Although I did not do any ass kicking or getting of my ass kicked. I spent the better part of the class confused. I'll just be honest with you. A lot of weird leg entanglement kind of business and swapping and flipping, and it didn't help that my partner was not terribly familiar with the material. I mean, I was only slightly better. I think I covered the same way to get up from a certain position, and I honestly had the hardest time trying to remember this stuff, and I don't know if it's the difference in the system, the difference in the training style, or what. But it seems like I have a little bit more difficulty with this stuff than I did with the Gracie system, or at least as it was instructed to me by the NWMA. And this isn't a hit on my current school. It's just a difficulty that I personally am experiencing. But yeah, as far as the movement goes, it started off with you're in butterfly guard, and your opponent is in front of you in combat stance, which I guess is one knee up, one knee down, and you hook the up knee with your outside arm, and you kind of kick it up, but instead of going for bringing it in tight and going for like a leg or I want to say a leg bar, but doesn't sound right. It's not a calf crank. It's just a leg lock. Yeah, leg lock. So going from like an ashigurami to a leg lock kind of position is one of the ways to progress from there. But this particular one, you kick the leg up and you tip over onto your on I guess like your all the way over to your left shoulder, and you get it into a deep half guard. And the problem I was having is that for the techniques that I've learned deep half guard on, it's, for one thing, I don't think we did lockdown on the previous one, but on this one we do kind of a lockdown, and then swap the legs so that you've got your left leg, I guess, is going to be on the in between your opponent's legs, with your right leg on the outside of your opponent's right leg, and you bring it up into where you've got the hamstring for your left leg. Basically, you've got like your knees clenched. You know, you got your left knee behind his left knee. You've got his left foot in your left hand, and you're pushing it, or no, right? No, it's the other leg. My apologies. Right leg, I guess. To where you're pushing it up to where you can get into a like a twister side control, and then going from a twister side control to, I guess, a honey dip, honey flip, honey whatever. I honestly didn't. I think there's got to be like another name for these movements, because it doesn't seem right. I mean, it's like switching from one leg entanglement to another leg entanglement to another leg entanglement, and I'm sure these are all effective things to know. I'm not trying to put a diss on it or something like that, but it's very difficult to remember, and it's something that I'm sure I'll have to do it like 8 billion times for it to gain any kind of cohesion in my mind. But yeah, that's my own difficulty. I don't blame anybody else for it. But that's basically what we did today. And like I said, I had a lot of difficulty with it. My partner had a lot of difficulty with it, and so it's just tough. One of these days, I've been walking around on my legs my entire life, but when I'm trying to tangle them up so I can get somebody in like a heel hook or a calf crank or a toe hold or something like that, it's weird. It's weird. It's unusual. It's odd. It's unfamiliar. But anyway, that's about as much as I can lend to it today. I mean, I wish that I had it more cohesively in my mind that I could convey it via my mouth, but that's just not the case. It's kind of an odd thing, and I didn't get to train on Saturday, so I was actually 2 days out instead of just one, and that I'm sure has some effect on it. Anyway, let's go ahead and throw down with some music. Gonna keep it short and sweet there. But where to go? What to play? Well, a body count. That usually makes us a good first dance. But what song? Now I played the shit out of that one. Here we go. Necessary Evil. First Dance. Body Count. Here on Coin Metal. Sorry about that. I kind of let that run a little bit too long. Twitter got a hold of me. It happens. Anywho, as far as what we're going to get into today, got a little bit of good stuff for you here. There's this one thing I was following on Twitter. I just kind of wanted to read this to you. This guy, Instinct Crypto on Twitter says, "I really don't get the point of tokenized stocks, but whatever. I guess welcome new things, right?" I replied, "I think it shows the IMF, SEC, CFTC, FinCEN, FATF, NYDFS, etc. are worse than pointless. They're keeping the compliant economy in the dark ages, while a mere crypto exchange is replicating every function of the conventional U.S. equities/commodities markets at an nth of the cost." And that's pretty much the long and short of it right there. That before you know it, we're going to be seeing on like Binance and maybe even other altcoin exchanges, we're going to start seeing things like oil and commodities, gold, fucking silver and shit like that. And, I mean, you might laugh, but we're providing some excellent interface for people to get into these markets, and it's only a matter of time, I believe, before such offerings are being made. And we've tried attempts. There have been attempts at it with regard to associating cryptocurrencies with specific commodities and or services, specifically things like gold, which I've indicated multiple times is completely impossible. Pot, same thing, kind of impossible. But the attempt, though, is what is important. And what I think it was a representation of is what we're about to talk about. And let me see if I can find the right one. I've got a few of them on here. Here we go. This to me is some really big news. Okay, it's almost as big as Visa finally conceding and using Ethereum. I mean, to me, that is basically Visa saying, all right, it's no longer cheaper for us to use our own networks than it is for us to use Ethereum. And we can get the transaction done just as good as if it was going on our systems. So, as soon as we verify that the funds have actually been received by the intended party that we're sending them to, we'll just count it as such on our books, and everything will be hunky-dory. Anyway, got this thing here. It's on thestreet.com. Tesla stock tokens begin trading on Binance crypto exchange. It's fucking incredible. How long have they been trying to get a Bitcoin ETF passed by the SEC? How long? But at least like half a decade now. They've been trying to get Bitcoin and other crypto derivatives out there, and the SEC and all these entities. No, you can't do that. Anyway, so this is by Stacy Elliott. So no penis. And well, wait a minute. I don't know. Stacy could be a man. We don't know. Anyway, continuing. This was authored on April 12th, 2021. And so yeah, let's go for it. Tesla stock tokens will be available on cryptocurrency exchange Binance when the NASDAQ opens Monday, but not for everyone. Investors in the US, mainland China, and Turkey will not be able to own the stock tokens, which allow traders to buy and sell fractions of underlying shares, a notable, if not groundbreaking effort that would lower the bar for entry into high-priced stocks for traders. The Tesla tokens will be priced and settled on Binance USD, or in Binance USD, BUSD, a stablecoin pegged to the US dollar and issued by New York-based Paxos Trust Company. Quote, stock tokens demonstrate how we can democratize value transfer more seamlessly, reduce friction and cost to accessibility without compromising on compliance or security, Binance CEO Changpeng Zhao said in a press release. Quote, through connecting traditional and crypto markets, we are building another technological bridge for a more inclusive financial future. The Malta-based company partnered with German investment firm CM Equity AG and Swiss-based Digital Assets AG to offer the tokens. The Binance stock tokens are fully backed and will behave in many of the same ways as the shares they represent. Token holders qualify for returns, and Binance will automatically pass on dividends or issue tokens representing any new shares following a split. Although the crypto community often touts that its markets are always open, the Tesla stock tokens will only be available when the NASDAQ is open. There's one other drawback. Token holders aren't granted the same rights as shareholders, like voting power, inspecting corporate documents, or suing for wrongful acts. These stock tokens can be sold in fractions as small as 1/100th the original share. That means that investors with only $70 could add Tesla to their portfolio with a token worth 1/10 a single share. It's worth pointing out that fractional shares isn't revelatory rather. Fidelity and Charles Schwab allow investors to buy fractions of ETFs, stocks listed on NYSE and NASDAQ, or those included in the S&P index. Robinhood, the online brokerage that earlier this year found itself caught in a Reddit-fueled rally for GameStop, AMC, and other stocks that had been heavily shorted by hedge funds, also supports the trading of fractional shares. As for buying stocks with crypto, that's not yet been done in a way that complies with U.S. securities laws. In 2012, one broker started allowing users to trade stocks and gold with Bitcoin. Then, in 2018, the SEC and CFTC sued, alleging the firm sold securities to U.S.-based investors who didn't meet discretionary investment thresholds and had failed to register itself as a dealer. A nearly identical series of events played out in early 2019 when Abra, founded by former Goldman Sachs software engineer and Netscape director Bill Barhide, started allowing users to buy ETFs and fractions of stocks with Bitcoin. By the summer of 2020, the SEC and the CFTC sent a cease and desist letter arguing that Abra had not properly registered investors buying the securities-based swaps and failed to transact them on a registered national exchange. Both companies wound up paying fines to settle the lawsuits. One broker shut down as a result, but Abra still operates its crypto exchange and wallet services. Binance has already had a near miss with U.S. regulators, but not for its tokenized stocks. In November, Binance sent emails giving U.S. investors 2 weeks to withdraw their funds in anticipation regulators would act. To create an airlock between Binance and U.S. regulators, the company set up Binance US. It offers access to fewer cryptocurrencies, charges higher fees, and its daily volumes of $89 million are dwarfed by Binance's $8.2 billion, according to a piece published by Decrypt in November. Binance.us is also unavailable for investors in Connecticut, Hawaii, Idaho, Louisiana, New York, Texas, and Vermont, according to an update posted to its blog at the start of the year. Binance has not yet said whether it or Binance US will seek to make stock tokens available to US-based investors. I would say no. And you know what? Good for them. They're going to make the money, and the NYDFS is going to sit there and look at them really fucking stupid going, why did we turn our state into a fucking digital gulag? There's all kinds of activity that's happening outside of our state that can't happen within our state because we're a bunch of greedy pieces of shit, and we can't handle competing with anybody. We can't handle a legitimate market where we're not cheating everybody. People. I swear, if there were a way to vote them out, I would bet you that the investors in New York and market participants in New York, those people who invest to try and make money, I believe that they would fulminate completely against the NYDFS on this. They'd be like, let us trade. Fuck. Anyway. Next up I got here is on Decrypt.co. Time joins Tesla in keeping Bitcoin on its balance sheet. And this is by Jeff Benson. It was authored on April 12th, 2021. And so yes, penis. One of the most recognizable publications in the world, Time magazine, will now be receiving some payments in Bitcoin, according to Grayscale CEO Michael Sonnenschein. What's more, unlike some people, it won't be immediately converting that crypto into fiat. Quote, thrilled that Grayscale is partnering with At Time on a new video series coming this summer explaining the crypto space, Sonnenschein tweeted today. Equally as important, Keith Grossman at Time has agreed to be paid in Bitcoin and will hold the Bitcoin on their balance sheet. A first for our media partnerships. Time President Grossman retweeted the news, blessing the partnership over Twitter. Grayscale is a cryptocurrency asset manager which holds over 3% of the Bitcoin in circulation via its Grayscale Bitcoin Trust. No further details were available regarding its Time partnership. Time won't be the first non-crypto company to keep Bitcoin on its balance sheet. Cloud software company MicroStrategy and payment processing firm Square pioneered that approach. No, they didn't. They were copying shit that we've been doing for years. Anyway, continuing. When electric automaker Tesla bought $1.5 billion in Bitcoin earlier this year, it announced in SEC filings that it may keep any Bitcoin it receives for car purchases. It has since confirmed that strategy. And that's actually nothing new in crypto. It's something new to these people, because when they take shares, they often argue for the capability of exercising those shares immediately. Meaning that, say like Mike Novogratz was getting hired by somebody as a CEO or a CTO or whatever, right? He's taking on that job and part of the payment, part of his compensation package is going to be shares of the company. So say it's Amazon, right? He would be getting some Amazon shares, and part of the negotiation process would be concentrated on when exactly Mr. Novogratz can exercise those shares. If he does it immediately, is he going to suffer any penalties? If not immediately, when? When would be the first time? When would be the best time? Is there any penalty period? Is there a premium period? So on and so forth. Those are the kinds of things they would be negotiating. But yeah, the whole thing with trying to get Bitcoin in, I think it's positive, that they are considering keeping Bitcoin. I hope they're not doing it through Grayscale though, where they're buying GBTC and they're not actually buying regular Bitcoin. But the idea of holding it, I think that's nice. It's a kind of the next progression. At one point or another, they would anticipate being able to spend that Bitcoin. So, yeah, it's kind of bullish. Anyway. And as far as, let me see, I think I got another one along that. Oh, I was looking up BitcoinTreasuries.org, and it's basically a series of bits of information concerning people that own Bitcoin, like who owns the most of it and so on and so forth. And it looks like MicroStrategy is the top there, with Tesla being the second. But they don't count. Wait a minute. Let's see if it shows us how many Bitcoin. Well, it looks like they've got okay, so it's 91,579 Bitcoin. Okay, yeah. Satoshi Nakamoto should be on this list because he has 1 million Bitcoin, and that's more than anybody on this fucking list. Anyway, so this next thing I got, it's kind of the kind of another reason why governments really should fuck off with regard to trying to regulate crypto, because it could be that crypto saves their hide in times of some major economic shit going on in their country. Anyway, I got this thing here. It's on decrypt.com or decrypt.co. Nigerian fintechs cut off from government verification service. And this by Ekin Genk. So, I guess penis? It was authored on April 11th, 2021. Nigerian fintech companies were, on Friday, suddenly cut off from a government service they need to perform mandatory identity checks on their customers. While they wait for the government to install a revamped identity system, fintech companies can't legally onboard new customers or must switch to services that don't require identity checks, such as peer-to-peer services, analysts told Decrypt. Quote, "The timing of this move couldn't be worse, especially given all the recent regulatory obstacles that fintech has faced this year, like the ban on banks dealing with crypto." Oluwaseun Opeyemi, a lawyer in Nigeria's capital Lagos, told Decrypt. Quote, that's not a quote. "The sudden blackout adds yet another hurdle for crypto companies. Quote, not very encouraging signs for foreign investment in Nigeria," Opeyemi said. Opeyemi? I don't know. Like so many other countries, Nigerian law requires fintech companies to verify their customers' identity. To do so, businesses in Nigeria rely on the government's 7-year-old verification database, the Bank Verification Number, BVN. But a regulatory directive on Friday suspended fintech companies' access to the BVN without warning. The government hasn't explained why, but it's likely because the government is replacing its patchwork network of identity systems, of which BVN is just one part. With a slicker identity system, the National Identification Number, NIN, explained Oladameji, a blockchain fellow at Claros. The NIN functions like America's Social Security number and consolidates all identity information into one handy number. But in its attempt to streamline verification, the government has left fintech companies high and dry. A number of people haven't switched to the new NIN system, and fintech companies don't have the tools to query the new database, said Oladameji? That's what it looks like. Oladameji. "This leaves fintech companies in a tough place," said Danny Oyekon, CEO of crypto investment firm Dan Holdings and social payments app Coins App. Quote, "How do startups verify the identity of their users without the BVN verification?" To remain compliant, Nigerian fintech companies could return to expensive identity verification methods that predated the BVN, said investment analyst Oluwaseun Esquire, such as checking information through with other institutions. Wow, this is not very well written. Quote, "And those cumbersome methods imposing additional costs on fintech businesses and their customers," he said. "Until the shiny new NIN system takes off, fintech will likely have to wait. And the crypto companies already struggling under Nigeria's directives against them will likely have to wait even longer." I don't think they're going to wait at all. The ones that are capable, the ones that are fully capable as crypto companies, I believe they'll probably just go OTC, while these fuckers are fiddling their thumbs going, maybe we'll get that database done and then maybe you'll be able to go back to business, but until we get the database done, it's illegal for you to do business, so you're going to have to sit tight. The fact of the matter is that these entities could be using cryptocurrency wallets and doing their exchanges, their transactions completely peer-to-peer, and the government and the bank, and then nobody has any fucking say over it. And this is the reality. This isn't like some dream. It's not some, 21st century fiction novel. It's what's going on right now. It's what's been going on for the last decade here in crypto. Anyway, let's go ahead and throw back down with some music. And, where'd it go? Well, I think, here we go. March of the Pigs by Nin, here on Coin Metal. And that was Voivod with Tornado. And as far as what else we're getting into today, got a whole bunch of stuff. This first thing I got is on Coindesk.com. Canaan plunges as inventory issues slashed Q4 Bitcoin mining machine sales. And this by Colin Harper. Talk about a bad time to not have product to sell. Shares of Bitcoin mining machine maker Canaan plummeted after the company reported a 75% drop in Q4 revenue on Monday as supply chain issues prevented the company from capitalizing on a roaring bull market and a resulting surge in demand for mining machines. Quote, "The outbreak of COVID caused supply chain disruptions and thus negatively impacted our revenues in the fourth quarter, according to CEO Nanjun Zhang. For the Q4, the Hangzhou-based firm posted Q4 revenue of $5.9 million, down from $24 million in Q3 of the same year. Total computing power sold was 0.2 million terahashes per second, representing a year-over-year decrease of 93.1% from 2.9 million. The market didn't respond kindly to the report, with American Depository receipts of the maker of ASIC mining machines dropping 34.2%, down $6.41 to $12.25 in recent trading. The company's adjusted loss, however, narrowed to $11.2 million from $28.6 million, as the company reported drops in R&D expense, selling and marketing costs, and general and administrative costs. Looking ahead, the mining machine maker said it already had a $174 million of contracted orders, with $66 million of cash advance from customers as of December 31st, 2020. The company forecasts at least $61 million in revenue for the ongoing Q1. Well, that's pretty impressive. Canaan's supply hangup comes at a time when demand from mining farms couldn't be higher. North American mining firms Marathon Patent Group and BlockCap, for example, are entering 2021 with aggressive plans to expand their hash rates as much as tenfold in 2022. Both BlockCap and Marathon purchased their machines from Canaan rival Bitmain. As CoinDesk previously reported, the demand has sent prices for machinery soaring on secondary markets. Yeah, that's to be expected. You know, there's plenty of interest out there right now for the Bitcoin, you know, and so the desire to mine it and acquire it the cheapest way possible is starting to rise. And I mean, it's one of those things that makes it really unlikely, in my book anyway, that we're really going to see any kind of divorce from Bitcoin the commodity and Bitcoin the network. There has been plenty of effort to do exactly that. To force the network completely off chain and thus put less emphasis on the blockchain itself as like a coveted attribute of cryptocurrency, or at least Bitcoin. And I think that's a big mistake. That over the longer term, if they were to manage that kind of divorce, we're seeing it only now, I believe anyway, because the market can afford it. Not enough of the market is having to depend on Bitcoin as a means of payment. Although, I will admit, there are an increasing number of entities out there that are doing exactly that. However, I believe that when these entities do get real cozy with their cryptocurrency situations, that they will not be considering the fact that the entities that are facilitating these payments are doing so to make a profit. And when it becomes more expensive for them to perform the transactions on chain, it is conversely going to become more expensive for their customers to do transactions with them off chain. This threat doesn't go away. You only delay it. The only answer to it is to eliminate the block size limit, because then all of the transactions that can be included in a block over a 10-minute period will be included in a block. And if it's received and counted in the mempool, then it might as well have gotten its first confirmation, because the network has seen it. If you can verify that it's in the mempool, the network has seen it, the network is going to include it. But no. And these fucking people, we got to invent some fucking inefficiency so we can invent a job for somebody. Give me a break. Anyway, during times like this, it's easy to lapse into those ideas that, we can just kind of, people are used to paying for this stuff, so we'll just kind of like overlap it directly over it, and we'll not tell them a whole bunch of stuff. And we'll just lie to them, and by omission, of course, just omission, not explicitly lie to them, but just not mention stuff. And everything will be clean. They'll never know the difference. So they'll keep using their fucking credit cards, and everything will be hunky dory. At some point or another, people notice the lack of value. They do. It will express. It doesn't matter how you try and hide it. It doesn't matter how you try and delay it. If it has any kind of real world costs associated with it, it will get more expensive over time. It's inevitable. Anyway, so I was digging around, and I found this one thing. I thought it was a little more complex or interesting than it appears to be. But it's, here, let's get on to this thing. It's on blogs.nvidia.com. GeForce is made for gaming, CMP is made to mine. And this is by Matt Woobling. So yes, penis. And this is actually authored on February 18th, 2021. So it is this year. Just not exactly this month. Continuing. We are gamers through and through. We obsess about new gaming features, new architectures, new games, and tech. We design GeForce GPUs for gamers, and gamers are clamoring for more. With the launch of the GeForce RTX 3060 on February 25th, we're taking an important step to help ensure GeForce GPUs end up in the hands of gamers. Halving hash rate. RTX 3060 software drivers are designed to detect specific attributes of the Ethereum cryptocurrency mining algorithm and limit the hash rate or cryptocurrency mining efficiency by around 50%. So I'm dedicating resources to inhibiting my own capability of taking advantage of my system resources. What kind of sense does that make? Anyway, continuing. That only makes sense. Our GeForce RTX GPUs introduce cutting-edge technologies such as RTX real-time ray tracing, DLSS AI-accelerated image upscaling technology, reflex super-fast response rendering for our best system latency, and many more, tailored to meet the needs of gamers and those who create digital experiences. To address the specific needs of Ethereum mining, we are announcing the NVIDIA CMP, or cryptocurrency mining processor product line for professional mining. CMP products, which don't do graphics, are sold through authorized partners and optimized for the best mining performance and efficiency. They don't meet the specifications required of a GeForce GPU and thus don't impact the availability of GeForce GPUs to gamers. For instance, CMP lacks display outputs, enabling improved airflow while mining so they can be more densely packed. CMPs also have a lower peak core voltage and frequency, which improves mining power efficiency. Creating tailored products for customers with specific needs delivers the best value for customers. With CMP, we can help miners build the most efficient data centers while preserving GeForce RTX GPUs for gamers. Okay, I can see a couple flaws in this. Number one, it's not for them to dictate to the market how to use the fucking hardware. If you throw down the $200 to $2,000 for one of their fucking units, it is yours. Their influence over what you dedicate those resources to is gone. The moment you lay down the money and it is yours, that is it. Whether you dedicate it to mining, whether you dedicate it to gaming, that is up to you. And NVIDIA has mistaken their place in the market on multiple occasions. They've simply refused to accept that there is more demand for their processors, for their cards, from Ethereum miners and miners of other cryptocurrencies than there is from gamers. Sorry, gamers. It's a fact. Now, if they were really smart, which it doesn't seem like they are, what they would be doing is upscaling their output. Holy crap. You know, if you're operating on 9-inch wafers, operate on 12-inch wafers. Scale the, increase the number of units that you output per process cycle, and then you don't have to worry about this. You know, if you can reduce your individual per unit cost, then you can satisfy both the gaming market and the mining market with the same devices. Then you don't have to create all these inefficiencies where you're creating two separate classes of fucking product lines just to divorce yourself from the fucking reality that your users are gamers, and your users that are gamers sometimes become miners, and sometimes become miners say, you know what, I'm done mining, I'm going to go back to gaming with my fucking GPUs. And then all of a sudden it becomes more profitable to mine, and they'll say, you know what, I'm done playing video games for right now, I'm going to mine with my fucking video cards that I bought from NVIDIA. Why? Because they're the most wonderful cards out there for doing it. Embrace that shit. Your only job is to design, produce, and distribute the best fucking video cards out there. You do not give a fuck what I am doing with them beyond that. Your influence over what I do with your units beyond that it's not there. It shouldn't fucking be there. Don't dictate that shit to me. NVIDIA is going to end up losing out over the longer term. Because what's going to happen is there's going to be a GPU maker out there that is going to be less adverse to embracing this aspect of the market and just accepting it as a whole. And NVIDIA is going to get their fucking lunch ate. You know? They're going to waste all their time trying to factor the fucking thing so it discriminates your use for you. Dedicates electricity and computing power to discriminating your use for you. And what's to suggest that nobody's going to design their own firmware that takes full advantage of the RTX 3060 platform? Oh, God, fucking heaven forbid, man. There might be a developer out there capable of doing that. And he might be willing to do it for free just to get it out there. Just to say, you know what, NVIDIA? Fuck you. It's happened before. It will happen again. You know? I mean, yeah. So, I think this is in case of NVIDIA getting it wrong again. You know, I mean, these people have actively lied about what the source of their sales have been for years. I mean, those of you who have been paying attention to all of this, you know, NVIDIA was selling all kinds of video cards from like 2013 through like 2017, 2018, before anybody really said, you know, why are you selling millions and millions of video cards every fucking year? Are there really that many gamers out there? What the fuck's going on? Are you sure that's just gaming sales? That's not minors? No, that's not minors. That's just gaming. That's people compete when they game. They got 3 video cards in their system when they're competing. That's actually the kind of line that they would feed people, right? And then all of a sudden, Bitcoin tanked, altcoins tanked, and it became a lot less profitable for a lot of people to mine. And they weren't out there buying millions of video cards anymore. And all of a sudden, fucking NVIDIA's sales tanked. And it was only then, when everybody's looking at them saying, wait a minute now, you're trying to tell me that the millions and millions of units that you were selling while the price is going up, that was just gamers. But when the price goes down and your sales tanks, you're trying to tell me that's not minors? Again, they're playing this stupid fucking game with the market that they really don't need to be playing. It's costing them money to do so. They're creating entire infrastructure in order to facilitate this fucking game that they could just as easily be dedicating to making more fucking video cards. And it's just to somehow differentiate some products themselves away from cryptocurrencies. Like doing so is going to make this go away or something like that. The fact of the matter is the vast majority of their sales for probably, again, I would say probably since 2013 had been cryptocurrency miners, not gamers, miners. And again, it's one of those things, it's because it becomes more profitable to do one than the other, and they make the switch. And after they've made that switch, though, they hardly ever just go back. A lot of times they'll do both. You know, where they'll take their deprecated cards and they'll game with those. Until, of course, it becomes profitable to mine with them again, and then they'll go back to mining with them. But that's beside the point. Again, this is not for NVIDIA to dictate to the users. It's up for the users, you, to determine for yourself. And I think that over the longer term, NVIDIA is going to figure that out. Or again, they're going to get their shit. They're going to get their lunch ate. Oh, wow. This is kind of interesting, though. And this is on decrypt.co. And this is kind of a countervailing pressure. You know, where not everybody who is involved in finance and crypto, whether willingly or unwillingly, is all that interested in it. You got this thing here, it's on decrypt.co. HSBC lacks appetite for Bitcoin, bans MicroStrategy stock. Oh my god, these guys can read a chart, I guess, huh? And this is by Jeff Benson, and it was authored on April 12th, 2021. HSBC, one of the world's largest banks, already blocks transfers from cryptocurrency exchanges to client accounts. It's taken its anti-crypto policy a step further. The bank confirmed to Reuters that it no longer allows customers to trade MicroStrategy stock due to the company's significant Bitcoin holdings. In an apparent March 29th message to a client on HSBC's InvestDirect stock trading platform, the bank said it had, quote, changed the policy on virtual currencies and virtual currency-related products. As a result, clients can no longer purchase or transfer such assets, though they can continue to hold or sell them. Quote, HSBC has no appetite for direct exposure to virtual currencies and limited appetite to facilitate products or securities that derive their value from VCs, virtual currencies, HSBC said in a statement reported by Reuters today. MicroStrategy, a publicly traded cloud software company based in the U.S., controls over 91,000 Bitcoin. The cryptocurrency comprises 80% of its treasury, meaning the company's day-to-day fortunes are contingent on Bitcoin's market price. Thus far, the strategy has worked. MicroStrategy has converted its $2.2 billion investment into closer to $5.5 billion as Bitcoin's price has risen to record highs. That clearly isn't enough to convince HSBC to make MicroStrategy stock available to Canadian and British retail traders. The London-based HSBC's approach stands in contrast to investment banks such as BNY Mellon and Morgan Stanley, which have jumped into Bitcoin trading activities. The latter even bought a 10% stake in MicroStrategy in December. For the moment, HSBC falls firmly in the, quote, blockchain, not Bitcoin camp, having worked with other global banks to run a permissioned blockchain for transactions, Contour. The timing of the move creates a tricky decision for HSBC as it comes so close to Coinbase's direct listing. Shares in the San Francisco-based crypto exchange begin trading on NASDAQ this Wednesday, but it's unclear whether HSBC regards it as a virtual currency, quote, product, given that the company's holdings are primarily in fiat. After Coinbase reported first quarter earnings with an estimated profit of $730 to $800 million, its stocks may be in high demand. HSBC did not respond to Decrypt request for comment. Yeah, I don't imagine they would. You know, I've said it multiple times that I think that we are going to see a multiple layer economy develop. That these legacy banks and legacy MSBs, you know, they're so used to things working in their favor and being able to operate on a crooked table because they know the guy that's got his toe under the leg of the table and offsetting it. Because they know who's made the game crooked, and that person or entity or parties has guaranteed them some advantage over the rest of the players at the table. Because they're in that kind of position, they think that position is permanent. They're always going to have their current market position, and that their proxy, their benefactor, is always going to be in the position of control that they currently hold. The problem is, if any of those assumptions changes in fact, the whole game is bust. And that's more or less what happened when cryptocurrencies happened, is that people were sick of this game. They were sick of this game that is completely tilted against them, and yet it defines their fucking destiny. It makes the stocks that they're holding worth anything. It makes the money they're holding worth nothing. And it operates completely outside of their control. And then comes along crypto. and now we kind of do this same thing, except in the opposite direction here, where these entities are now users. These entities are now investors. It's no longer them as kings. It is them as little people like you and I. And I've seen multiple references now to this thing where Visa was transacting USDC via Ethereum. To me, this is them saying, we become your 15-year-old next door neighbor's kid. That it is cheaper for us to transact the way that he does on these public networks than it is for us to conduct these transactions on our private networks. And this is going to be the same. No matter what entity we're talking about, it's going to be the same. Visa, MasterCard, the Federal Reserve, SWIFT, any of these entities, if any of them have ever tried a strictly peer-to-peer transaction with any cryptocurrency, not just Bitcoin or Ethereum, any cryptocurrency that works on a public network of miners, as soon as they taste that goodness, as soon as they taste that freedom, and they see how cheap it is and how final it is, they look at one another in the room and they say, this is it. This is our jobs have just been taken. We've just been replaced by a robot. It's only a matter of time before we no longer hold our current market position, and this is taking the way of it. Their mistake is to assume that their position is final. That they would have no seat at the table. That's a big mistake. The fact of the matter is, they're just as important as they'd ever been. They currently have the market position that they do. But rather than trying to accept the way that these systems work and embrace it, they fought against it. And the ones that fight against it the longest, they're going to lose. Like MicroStrategy, they'll eventually lose, but it's only because the market knows better than them. They're just end user investors just like you. But collectively, you and your friends and those friends and the friends on Twitter and the friends on Telegram, the friends on Discord, collectively, when you're making your decisions from this vast array of different stimuli that you could be acting on, the decisions that you make are much more nuanced and much more educated than any regulator could hand down to you with some sort of default framework that's supposed to be one size fits all. It doesn't fit you. You aren't in the frame. And it's a reality that the market has been trying to cloak for a very long time by keeping us interacting with one another and with really limited contexts, highly regulated, highly taxed contexts, highly defined contexts. And those contexts are meaningful when we're transacting solely within their fiat currencies, because those are the systems, those are the networks that they are monitoring and controlling. But once you step outside of that and you get into crypto, you're in an entirely different realm now, where you can move the same amount of material that you could in legacy systems, but at light speed, settling in seconds, minutes, globally, and for pennies, if not less. It's like I said to somebody on Twitter, it hit me like an epiphany while I was suiting up to go down to the floor, and I think it was like the second, maybe third month of my working at this fab, and I was suiting up in the bunny suit in the locker room, and I was thinking about efficiencies. And how to increase our efficiencies, how to work our efficiencies to where we were wasting less time and getting more product out the door, right? And so I'm thinking about this, and I thought about it a while, and I was looking around, and I saw the room that was available and stuff, and I'm like, it's conceivable that with the proper spacing, that myself and the entire staff down here could be replaced with robots, and that would probably lower the production cycle time and increase our output significantly. I just conceived of the demise of not only my position, but the position of everybody around me, and the replacement of us with robots. Okay, so I started thinking about that. I'm like, well, if you get rid of us, then our shift lead, Dan, doesn't have a job anymore. Oh, well, fuck. If Dan doesn't have a job anymore, then that means that there's no other shift leads on any of the other shifts. And so all their jobs are gone. Well, shit, there goes the shift manager job, because you don't need him to manage the shift leads, to manage the people on their shifts. And so, this whole statistical process control virus kind of ran through my mind, and it got me down to the idea that the virus would not be limited to things like production lines. That eventually this mentality of winnowing away all of the unnecessary, all of the inefficiencies from a system, would escape the fab. It would escape the containment of production lines. We would no longer just be thinking about production lines. We would also be thinking about the managerial level in our buildings, in our corporate structures, and then we'd start looking at our executives and all those, and we'd start looking for inefficiencies there. And it wouldn't stop there; it would escape there. And I really believe that Bitcoin and other cryptocurrencies, they've provided the tools for us to erase the inefficiencies further, except now in digital finance as well. And I think ultimately we're going to find that things like our current regulatory structures and all that are inefficiencies. They're costing us money. They're siphoning extreme volumes of wealth that could be dedicated to better things. Anyway, let's go ahead and throw back down with some music. As far as where to go, I know what it is. Here, Motorhead, Ace of Spades here on Coin Metal. And that was Soundgarden with Outshined. And it is with that I'd like to bring this episode to a close. Thank you very much for listening. I certainly do appreciate the support. We will be back again on Wednesday at 8 p.m. Pacific Standard Time. And so until then, I want y'all to trade safe. Do your homework. And watch out for your own bunghole, because nobody else is going to do it for you. And as far as our last dance is concerned, of course, I have not picked one out. But, I'm looking at this list, and I think I know what to pick. I'm just got to get down to it. And here we go. Push It by Static X. Last Dance here on Coin Metal. Thank you again for listening, and y'all have an excellent evening. Good night.